Hello and welcome to the S2P Market Commentary, Market Week ending January 25th, 2013. Market breadth. With this past week's market advance, our bull-bear point and figure ratio rose from 2.50 to 2.69, further into strongly bullish territory. The total count of securities in bullish or bearish patterns increased 4% to 2,434. The count of bearish stocks decreased 2%, while the count of stocks in bullish patterns increased 6%. The S2P P&F Market Breadth Summary Chart shows us a market now 5 consecutive weeks in bullish territory. Paid subscribers have access to the data from which the chart is generated. You may become a paid subscriber by visiting S2PMarketSignal.com and clicking on the Membership tab. There is a free 2-week trial subscription for those who would like a trial subscription. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 69 points for the 9th rise in 18 weeks. At a positive 440.55 points, it has just broken above the September 2012 top and remains above the November 2011 top, the July 2012 top, June 2010 bottom, the March 2011 bottom, the June 2011 bottom, the August 2011 bottom, the December 2011 bottom, the March 2012 bottom, and the November 2012 bottom, but below the November 2010 top, the January 2011 top, the November 2011 top, and the February 2012 top. Volume analysis. In this week's volume analysis, the Russell 2000 ended in accumulation mode. In the last 2 weeks, it had 5 accumulation days and 1 distribution day. Of the other indexes, both the S&P 500 deposit receipts and the Diamonds Trust ended in accumulation mode. Accumulation days are counted when the index closes up on higher volume than the prior day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Russell 2000 ended the week in neither accumulation nor distribution mode. Momentum. The CCI 20 Daily began a Woody's uptrend 8 weeks ago. It continues below the plus 100 signal, but at 91.88 it remains outside the plus or minus 50 range for a valid zero-line reject signal. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's downtrend 8 weeks ago, while the daily CCI 20 began a Woody's uptrend 8 weeks ago. The CCI 20 weekly now has 4 weeks above zero and at 93.68 is outside the plus or minus 50 range for a valid zero-line reject signal. So we'll have to wait a bit for one of those simulated trades. Industry rotation the last 2 weeks. All of the top 5 and 2 of the bottom 5 industries are positive. Bullish, disk drives has entered and leads the top 5. Computer hardware remains in the top 5. S&P retail and internet have entered the top 5. Gold and silver remains in and now leads the bottom 5. Oil services has left the top 5. Bearish, banks, and comp tech remain in the bottom 5. Semis has left the top 5. Focus this week. James Turk. Central banks are losing the war to suppress gold and silver prices. Analysis by ZeroHedge.com. James Turk says, quote, My guess is that 2013 and 2014 are going to be big up years for the precious metals, but we still have to contend with the central planners and the various government agencies, which have been actively trying to keep the gold and silver prices from reaching fair value. The central planners are losing the war. They may win an occasional battle or two, but they're losing the war, and eventually gold and silver are going to go higher." End quote. Tyler Durden of ZeroHedge.com, quote, "The process causes a transfer of wealth from those holding overvalued money to those who hold undervalued money. That's what's been going on for the past decade as the price of gold has steadily marched upward versus flat currencies." End quote. Consider that as you plan your investments for the next couple of years. Thank you for joining us for this week's Sand to Pearls Market Commentary, submitted by Donald Lee. Have a great week. Happy trading.